welcome back. You're watching Traders Corner, and joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, lots of political shenanigans, and we will get to the effect that they're having on our own market in the moment. But I suppose the US has Donald Trump, so they have to contend with him. And that trade really, or the Trump rally, has, I suppose, faltered in a significant way.
Yeah, it has. We highlighted this last week. So if you look at the chart of the S&P 500 that's up on the screen now, you can see the what I like to call the Trump trend, which started in November last year, and it rallied and rallied. Now, we've broken below that trend line now in the middle of March. And you can see since then, the market has been consolidating a little bit below that. That, to me, over the last week or so, looks a little bit like it might be a rising wedge type of pattern. And it started to break to the downside last night. So let's just see. I mean, if I'm right, then this potentially does open another leg to the downside, and we could see the supports down at 2,300 come into play, and below that there's support at 2,275. I guess I could be talking my book to some extent, because we do have an option structure on where you can see the payoff profile on the right-hand side of the page there. And below 2,350 is where we make money on that structure. It expires on the 21st of April. So I would ideally want to see the market coming down by the 21st of April, because then we'll make money out of that option structure. If, on the other hand, it doesn't, and it moves higher, well, then the maximum that we can lose is our premium of $140. So I'm not particularly worried about that if that is the case. We've already counted for that premium having been paid away. But it would be nice to make a little bit of money on this option structure, if I am right.
Yeah, certainly, and it would certainly do wonders for the international arm of the Traders Corner portfolio.
Indeed, which is floundering a little bit, yeah.
Yeah, we'll get to that. Garth, talking about our own market, though, I'm sure Jacob Zuma is probably sitting at home if he looks at the markets and thinking, well, you know, the market loves my decision. The market loves these moves. And maybe you could explain for those who are puzzled as to why the market is taking it so well.
Yes, well, let's have a look at this. So I'll show you the top 40, and then I'll explain a couple of things around why the top 40 is up and why the markets are rallying. So this is the chart of the top 40 index here. You can see we had this downward sloping channel through January, February, and into early March. Then the market broke out through the top of that channel, and it's been building on those gains ever since. Now today, we don't show today's trading action on this graph, but it's trading up at just about 46,000. Last week I said 45,500 would be a resistance zone to watch, and if we broke through there, then chances are we could go back to the previous high that we saw in January, which is about 46,800. So we are through that 45,500 resistance today, so it looks to me as if we could well be on our way to 46,800. But if you ask me, why is the market strong when we've got all this political nonsense going on and people should be thinking that the stock market would be falling, and yet it's not? It's because our market is very, very sensitive to the currency. And if you have a look, now these are the top 6 shares on the JSE by market capitalization. And just take a look at the first 5 of those. So it's Naspers, Richemont, Billiton, Anglo-American, and British American Tobacco, with their respective weightings on the right-hand side there. Collectively, those 5 shares make up 46% of the weight of the of the top 40 index. And all of these shares are dual listed. Naspers is not dual listed, but it has Tencent in Hong Kong, which is kind of like a pseudo dual listing almost, because Tencent is such a massive part of Naspers business. But the rest of them, Richemont, Billiton, Anglos, and British American Tobacco, are all dual listed in London or Zurich in the case of Richemont. And what happens is the primary listings for those shares are offshore. We have a secondary listing for those companies here in South Africa, and whenever the rand weakens, the share prices locally need to adjust upwards in order to continue to make parity with their dual listing on the foreign exchange. Yeah. And hence, when the rand weakens like it has done over the last week, you get a significant move up in the top 40. And I mean, I'm just focusing on the first 5 shares there. There are others. There's Old Mutual, there's Mondi, there's Investec. These are also companies that are dual listed in London, which also need to make the same adjustments. So a weaker rand is very, very positive for the top 40, as we've seen in the last week.
And for their earnings, because you know, a lot of their earnings will be entirely offshore based.
Yes, that's right. So a lot of these companies do derive most of their earnings offshore. And that's also an interesting point to note. Approximately 70% of the earnings of the top 40 index are now derived from outside of South Africa. So it's not just to say the dual listings, which are what we're talking about here, those are the direct rand hedge stocks. But you look at something like, for example, an Aspen, which derives a lot of revenue from offshore. It doesn't have a dual listing anywhere, but it derives a lot of its revenue from offshore. And so approximately 70% of the earnings of the top 40 index are now derived offshore. So hence, again, when the rand weakens, it props up the shares that are currency sensitive.
Well, clearly you weren't thinking of Jacob Zuma in a very positive light. He drew a really lovely cartoon earlier last week, which showed Zuma with his Bentley belt about to blow it all up. But it has done wonders for one of the shares in the portfolio, and we'll get to that in a moment. But if we have a look at the rand-dollar exchange rate, which we did also flag last week.
Yes, for those viewers who don't know what you're talking about, go and look on my Twitter timeline. There was it was my attempt at being the next Zapero, drawing a cartoon of what I felt depicted the day after Zuma fired Pravin Gordhan. Anyway, here's the chart of the rand-dollar exchange rate. Last week when we looked at this, we spoke about the importance of the 13 Rand 20 level. That level was the previous lows that you can see there in August last year, in November, and again in January this year. Eventually, we broke below 13.20, and that saw the rand going quite a lot stronger. Obviously, the developments of the past week, since Pravin Gordhan was recalled back from London, his firing, the ratings downgrade, I mean, all of this, we've had a hell of a lot that's happened, and it's actually just over a week that's all of this has happened. But you can see quite clearly there the effect on the currency, where we've gone from 12 Rand 30, now we're sitting up close to 13 Rand 80 this morning. So a significant weakness for the currency, and the fact that we've gone back above that 13 Rand 20 level is quite significant. I don't know whether we're going to go significantly weaker from here or not, but I would hazard a guess and say that I think that now the days of the rand going significantly stronger are probably behind us.
Yeah, and certainly Nomura's got calling 15.50, possibly towards the end of the year.
Yeah, I would certainly be very cautious on wanting to be long the rand from these levels. I think that's probably the wrong trade. If anything, I think the bias is probably for the rand to continue to gradually move weaker.
Yeah, well, maybe we can talk about shorting the currency at some point.
Yeah.
But Garth, let's look at some of the trades that you've actually had for the portfolio. GlaxoSmithKline has not been a very happy one for you.
No, it hasn't worked, unfortunately. So here's a chart of GlaxoSmithKline. Obviously, this is done on our offshore portfolio. GlaxoSmithKline listed in London, so we traded it in pounds on our offshore account. We did this trade about 2 weeks back, and I bought 500 CFDs for our portfolio at £16.86. At that stage, I was looking at an ascending triangle there, and I figured it looked like it was going to break to the upside. And unfortunately, I was wrong. You can see that price has drifted along, and it's actually triggered our stop loss on the move below 16.65. So I've exited that trade. I got stopped out at 16.63 in the end, so missed the stop loss by 2 pennies, but not serious. We lost £150 on that trade in the end. So it's not the outcome that we wanted, but it's not the end of the world either. It works out to about 1.5% capital loss that we've taken on our offshore portfolio. So not ideal, but certainly not the end of the world either.
Yeah. Well, luckily, it's been to some extent offset by the trade in Naspers, which is booming for now.
Well, that's right. So Naspers we've traded on our local portfolio, and this one's really looking good for us. It's actually gone beyond the target that I'd set, and it continues to look strong. So I'm kind of in the mindset that I'm going to try and run this profit a little bit further on Naspers still. You can see that the share price had been consolidating sideways in a range basically between 2,100 and 2,200. That was since January of this year. And I took a view in early March that it looked as if it was likely to break out to the top side of that trading range. We went long of 30 CFDs at 2,165 Rand, and we were looking for a move to 2,300. But I know I've said it last week, and I think in the previous week as well. I'll actually look to probably run this profit longer, because I think 2,300 is a bit too conservative. I think there's probably room for further upside. And in fact, today, the share is up quite significantly again. It was trading up north of 2,400 Rand this morning. So I think at this point, I might look to place a trailing stop loss on it so that we stay in if the price does continue to push higher. But if it begins to come lower, then we'll bank that profit. But it's been a great trade. I mean, this is up. I think we're up about 7% of capital on this one trade, so that's excellent.
Yeah, no, fantastic. And in no small part thanks to Jacob Zuma's actions and the weaker rand. So
correct.
We can thank him for that.
Yeah.
Garth, and this week you're looking at entering a trade, or you have entered a trade in Grindrod.
Yes, I'm looking at Grindrod. It's interesting. So just to tee up the trade, this is a chart of Grindrod with the Baltic Dry Shipping Index overlaid. It goes back to the beginning of January, so that's where the chart gets normalized. And you can see that the Baltic Dry Index dipped through February, but it's rallied quite hard through March, and now we're sitting in early April. It's still going higher. Grindrod, in the meantime, is kind of tracked along sideways. Now, I know Grindrod is not just a shipping stock anymore. They've got a lot of land-based logistics and other things in their business. But it still is always quite instructive to look at the Baltic Dry Shipping Index, just to get a feel for shipping rates and how that looks. That, to me, suggests that the picture is fairly rosy. And the other thing is that Grindrod is one of those stocks that is fairly currency sensitive. So a weaker rand should actually be beneficial for Grindrod. So my thinking is that the stock has kind of gone to sleep, but it could be preempting a breakout through the upper end of the trading range. So if I look just now at the pure chart of Grindrod itself, the price chart, here you can see the structure. This 14 Rand 75 level is quite big overhead resistance, and it's bumped up against that level a number of times, but there's definitely buying interest at the lower levels. You can see the pattern of higher lows evident here over the last 2 months or so. And that suggests to me that the buyers are active at the lower levels, and that when this thing resolves itself, it's probably likely to resolve itself to the upside rather than to the downside. So I've gone long at 14 Rand 38 this morning. My stop loss is 13 Rand 90, and target I'm looking for 15 Rand 50 over here.
And theoretically, it should start moving because that weaker rand possibly hasn't caught up with this share. Maybe
that's sort of the line of that's kind of my line of thinking. Look, we'll see. It is dangerous to preempt a breakout. It was the same as what we saw with that GlaxoSmithKline trade. I preempted the breakout thinking it was going to push higher, and it didn't happen. And I've done the same here. So I hope I'm not going to be burnt twice. But I do look at the setup, and I look at that fundamental backdrop, and I think, to me, the higher probability here is that it probably looks to break to the upside.
Yeah. Okay, well, take us through the mechanics of that trade in greater detail.
All right, so I've gone long at 14 Rand 38. Stop loss is 13 Rand 90. My risk per share is 48 cents. I'm risking 2,000 Rand, which is 2% of our South African portfolio. So 2,000 Rand divided by the 48 cents, which is our risk per share, that gives us 960 shares. So I've gone long of 960 CFDs because it's a 1-for-1 conversion ratio. And the target is 15 Rand 50 over here. So our risk to reward ratio is 1 to 2.33.
Okay, so that's not bad, but as you say, there's a danger in preempting the breakout. Presumably, if you wait for the breakout, that risk-reward ratio would shrink somewhat.
Yes, that's right. If I'd waited for a breakout, then I would be paying a much higher price for the shares, and then the risk part would be bigger because I'd have to put my stop loss a bit wider.
Yeah.
So that's why I find with these types of setups, it does often work to get involved, preempt that break, and then once it breaks out, you're actually in already. And when the share pushes aggressively higher, then you're actually almost ready to start unloading it and taking profits on that breakout.
Yeah. Well, given all the events of the past week or so, Garth, what does the portfolio look like?
So our local portfolio is actually looking quite good, thanks very much to this Naspers trade. You can see we're up 7,385 Rand there. So our local portfolio is up 6.2%, so looking good on that account. Offshore, unfortunately, not looking so good. We are down 1.9% over there. You can see our most recent loss was that GlaxoSmithKline trade. And then, of course, we've got our S&P 500 option structure running in the background where we have already accounted for the premium that we paid. And obviously, we run that out till the 21st of April and see if the market comes off a little bit, we'll be in the money on that structure. If not, we lose our $140 premium.
Yeah. And then to end off with, you've got a couple of courses coming up in May.
Yes, I'm going to be busy in May. So in Johannesburg on the 11th of May, I've got an Understanding CFDs course. And then my high probability course I'm running on the 13th of May in Johannesburg and on the 27th of May in Cape Town. So anyone that would like info on either of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
And just a last reminder that we can get a weekly alert from the website.
Correct. You can go to traderscorner.co.za and go to the middle of the page, and you'll see there's a link there for a free weekly email. And on that, you will basically get an email sent to you every Tuesday at around lunchtime detailing what is coming up on this show for the week ahead.
Right, Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.